Hello there, everybody. Welcome back to our program here on XM Live. Hope everybody has been having a fantastic day so far with great and amazing trades as per usual. Happy Friday to everybody joining the special show, guys. And feel free to ask me questions at whatever point of the show you want. So I'm welcoming you to my evening show. This is called the Candlestick Patterns Show, which I present every Thursday and Friday at 2:20 p.m. GMT right here in the XM Live room of the XM Live Education. So, guys, I hope you've been having a great day so far. I mean, we're one step closer to the weekend, which is so exciting. And if you don't already know who I am, my name is Anna. I'm one of the XM Live Education hosts. And yeah, feel free to shoot away your questions, participate in the chat room. Let me know where you guys come from. Let me know what's the plan for the weekend. In general, I love to interact with you. So the live chat room will enable you to do this, okay? Now, Candlestick Pattern Show. Let's get to it, guys. Okay, so in this show, what I'm going to be doing is I will be introducing you to the most popular and most commonly and widely used price chart used by traders in technical analysis all over the world. It enables traders to interpret information about prices quickly and just from studying a few price bars. I do want to emphasize the fact, guys, that this will be a more visual type of show. Meaning it's going to be beginner friendly, easy for people who are just starting their trading journey to follow, so that, of course, everybody can easily grasp the concept of a candlesticks chart and easily understand and recognize the different candlestick patterns that exist out there. So any more technical questions or advanced questions will be answered by trading experts who, in fact, are live right now, right next door in our other two live stream rooms, the English beginner room and the English advanced room. So whenever you have some more advanced questions, of course our experts are live and they're available to acknowledge and reply to all your answers in real time. So click on one of the tabs above according to the room that you want to join based on your level of expertise in trading, and you're going to be taken to that room specifically. Also, hello to everybody watching us from YouTube, guys. It's very exciting to have you here. Welcome, Candlestick Pattern Show, and don't be shy to ask me questions, guys. I'm going to be answering everybody. All right, so candlesticks chart, the most popular price chart. And yes, guys, this is what a candlesticks chart looks like. Now, let's dive into what are candlesticks? What do they do, how they work, and how can we actually apply them in everyday settings? But before we get into the concept of a candlestick, let's talk about the very basics. How did it all begin? Now, fun fact for you guys who have never seen or heard about this candlesticks chart, guys, it's a big thing. And it was first used in the 17th century, so we're talking about a long time ago, by Japanese rice traders. And then around the 80s, it was introduced in the Western world. Now, Homo Munhisa, which is this man right over here, is considered and known to be the father of candlesticks charts because he's the person who came up with this concept to make the rice trading industry, which, as you see in this image right above, Homu, was a little bit hectic. So candlesticks charts came to save the day and make everybody's life a little bit easier. Now, around the 80s, people started wondering, okay, what are candlesticks? What do they mean? How do they work? And that's when they really came to light. Today, if you walk into any dealing room, the chart that you will see everybody using is, by default, candlesticks. It has become very popular. And after all, this is the reason why I created this show, guys, to familiarize all of you with this chart over here. Now, staying on the basics, with candlesticks chart, as you see right here on the image on the left, we have thick rectangular bars, I would say, throughout the chart, followed with vertical lines extending from both ends or both sides of each of these thick rectangular bars. Now, do you guys see the similarity with these bars and actual candles and candlesticks? Well, guys, this is the idea behind the name of this popular trading or price chart. It's called candles or candlesticks due to the fact that these rectangular bars, showing us, every trade, is they basically actually look like a candlestick, guys. Traders love their trader lingo. They have their own language to describe different events, chart patterns, like so, trading charts. Everything that has to do with trading, they have their own specific language, guys, their own unofficial lingo terms. And this is one of them. So candlesticks charts are called and are known this way due to the fact that these bars look like candles. Simple as that. Now, let's investigate more into the concept of a candlestick. Now, there are three basic features within a candlestick, guys, that we're going to be focusing on. First feature is, again, that thick rectangular part of the candle, which is called a body. And what it does is it holds information on the open and the close of the day or a particular period of time. It actually shows us the difference between the open and the close. The second feature, all right, are those vertical lines that extend for both sides of the candle body, known as shadows, tails, or some traders call them wicks. And what they do is they represent the high and the low that the price has reached throughout the day or whatever the particular time frame you're trading on. The third feature is the color. Now, candlesticks charts are widely based on color coding. As you saw in that previous image, we had green and red. And in fact, it is the color that separates bullish from bearish candles. Now, bullish means that you're going to find the close higher than the open, and bearish is the opposite. You're going to find the close lower than the open. Now, what do I mean? Let's move on to the anatomy of a candlestick. So the anatomy of a candlestick basically means that we're going to take the candle and separate it in different parts and show you, and we're going to be discussing what each part of a candle indicates. Now, as you see, candles are very visual and easy for people to see and recognize. If the candle is green, you know that the close will be found above the open, meaning that it is a bullish candle. It serves a bullish signal. On the other side, right here, if the close is below the open, right at the very bottom of the candle body, then you get your red candle and therefore you get your bearish signal. So this is how candlesticks work in terms of color coding. It's super simple. Green for bullish, red for bearish. Also, in order to have a candlestick chart, guys, essentially you need to have four prices. The open, as you see right over here, the high, the low, and the close. Same for the red candle. With trading charts like this, what we're looking at is the price action. What does this mean? It means that, okay, so we have the open price, meaning when the market opens, this is what it shows. Then the price moves up to reach a high, the highest point. Then it moves down to reach a low, the lowest point. And then the price closes at a certain point. This is what we mean when we say the close. And this is the pattern, after all, that takes place in the market every single minute, a day, a month, a week, and so on and so forth. This is exactly what we mean when we talk about price action. It shows you everything that happens throughout throughout a particular asset during a specific period of time, according to the time frame that you have your trading chart on. Guys, this is all very valuable information for any trader out there, let me tell you. Okay. Moving on, in this show, we're going to be focusing on 12 candlestick patterns that every trader should know. Now, there are several and numerous candlestick patterns that exist within candlesticks chart. However, it's important to know the most, important, the main ones, and the most reliable patterns, according to traders all over the world. So, today, we're going to be focusing on 6 bearish candlestick patterns. So since I present my show every Thursday and Friday, yesterday we spoke about the 6 bullish candlestick patterns that everybody should be aware of. And today we're going to be focusing on those bearish candlestick patterns. So we're going to be chatting about the hanging man pattern, shooting star, bearish engulfing, evening star, 3 black crowns, and dark cloud cover. Very fancy names, as does everything around, the trading world and the languages of traders. Traders, again, love to use their own words. They have their own unofficial lingo terms that they use to describe everything surrounding the topic and the subject of trading. And candlestick patterns, are one of those. So hanging man, shooting star, bearish engulfing, evening star, very fancy names. But the fun thing is that there's always a link with the name and each pattern. So we're going to explore that in a minute, guys. Now, Bearish candlestick patterns usually form after an uptrend and signal a point of resistance. Heavy pessimism about the market price often causes traders to close their long positions and open a short position to take advantage of the falling price. So the first bearish candlestick pattern that we're going to be discussing today is the hanging man. Now, the hanging man is the bearish equivalent of the bullish hammer. It has the same shape, but forms at the end of an uptrend, and also it's red. The hammer, obviously, which is a bullish candlestick pattern, is green. It indicates that there was a significant sell-off during the day, but that buyers were able to push the price back up again. The large sell-off is often seen as an indication that the bulls are losing control of the market. Next, we have the shooting star. This is what it looks like, guys, within your trading chart. The shooting star is the same shape as the inverted hammer or the inverse hammer, which is the bullish candlestick pattern. But it is formed after an uptrend, as do all bearish candlestick patterns, and it has a small lower body and a long upper wick. Also, it's red. Usually, the market will gap slightly higher on opening and rally to an intraday high before closing at a price just above the open, just like a star falling to the ground. And this is exactly the idea behind this shooting star label or name for this bearish candlestick pattern. Bearish engulfing. And guys, according to trading experts, this is a very reliable bearish candlestick pattern that everybody should be aware of. So keep an eye out here. The first sorry guys, again, the bearish engulfing pattern occurs at the end of an uptrend. Once again, the first candle, as you see, is a small green body that is engulfed by a subsequent long red candle, as you see right here in the image. It signifies a peak or slowdown of price movement, and it is a sign of an impending market downturn. The lower the second candle goes, the more significant the trend is likely to be, and therefore the potential direction is slowly and gradually going to be moving downwards, okay? Bearish engulfing, very important bearish candlestick pattern that you should know, guys. Moving on, evening star. Now, the evening star is a three candlestick pattern, meaning that it's made up of three candles, and it is equivalent of the bullish morning star. It is formed of a short green candle in between the ranges of a long green candle right over here on the left and a large red candle on the right. It indicates the reversal of an uptrend and is particularly strong when the third candlestick erases the gains of the first candle. Okay, so this is the first candle over here, and then the red comes up to erase those gains and move the potential direction from upwards to downwards again. Three black crows. Now, this candlestick pattern comprises of three consecutive long red candles, as you see in the image over here, with short or non-existing wicks. Wicks, again, are those vertical lines that extend from each side of the candles. So short, non-existing wicks going on here. Each session opens at a similar price to the previous day, but selling pressures push the price lower and lower with each close, and this is very obvious within this pattern over here. Traders interpret this pattern as the start of a bearish downtrend, as the sellers have overtaken the buyers during 3 successive trading days. And then lastly, we've got the dark cloud cover candlestick pattern, which indicates a bearish reversal. It is a black cloud over the previous day's optimism. It comprises of 2 candlesticks. We've got a red candlestick, which opens above the previous green body and closes below its midpoint. It signals that the bears have taken over the session, pushing the price sharply lower. If the wicks of the candle are short, it suggests that the downtrend was extremely decisive. Something to note here, guys, that's very important is that, again, for this specific bearish candlestick pattern, which is the dark cloud cover, just remember, guys, the first candle is green, second candle gaps up, then turns red and closes below the 50% of the first candles, as you see over here. The third candle should also be red, and the confirmation is down when it falls below the low of the second candle. So, again, this is a green candle over here, guys. We've got a green candle means we have our bearish candle. Close is higher than the open, so close is always at the top for green, and open is at the bottom. And for this candle, if we take a knife and slice it up, it's 50% right here, 50% over here. So the second candle, it's obviously red. It gaps up right here. And again, the opening price is right over here, closing right over here at the bottom, okay? Why? Because it's red, it's a bearish signal. And with bearish, we mean that close is lower than the open. So when the second candle closes below the 50%, so below the midpoint of the previous candle, this is the dark cloud cover. And then, of course, we need to have the third candle right over here. It should be red. And this is the bearish candle confirmation. So it's all up to this candle over here to confirm the bearishness and the strong bearish signal of this particular candlestick pattern.